I'm here with Connor McLaughlin, who is an XRP and crypto expert. Connor and I met just a short time ago down in Cape Canaveral, Florida, at an after party. And Connor, you're quite a young guy, but I was very impressed as I started to watch your YouTube channel just at how in depth your understanding is of the crypto space, how you articulate things, and frankly, your ability to monologue. I've always struggled to understand how people could just jump on, but you have a really great voice, a good voice and presence for podcasts. You're like perfectly built for YouTube. But first and foremost, man, thank you so much for joining me on the call today. Welcome.
Yeah, really appreciate coming on. And yeah, for those of you who might know me elsewhere, I go by Mickle on YouTube. My real name's Connor McLaughlin. So Mickle if you're ever looking for my stuff. And yeah, no, it was a pleasure getting to meet you down in Cape Canaveral. It was a ton of fun and excited to talk to you today.
Yeah. So before we get into all the crypto stuff, which I know my audience is going to want to hear more about, especially from you, I am actually quite fascinated with your entrepreneur journey so far and how you've been able to develop such a prominent YouTube channel in such a short period of time. You're a relatively young guy. How old are you, if you don't mind me asking?
26.
26. And could you briefly tell us the story of how you did it? Because that in and of itself should probably be its own podcast, but it's very inspirational.
Yeah, no, I appreciate the opportunity to talk about that. So, I started out in surgical robotics, biomedical engineering. On the side, I started doing a lot of research on cryptocurrencies, and I was just fascinated by cryptocurrencies as soon as I found out about them. I was already an investor, specifically investing in a lot of tech. I bought Nvidia, Tesla back in 2016, 2017. Haven't sold a single share. In fact, I've been adding Tesla recently, but it was that kind of love for tech and investing that brought me to cryptocurrencies. It's like a very cool combination of both. So I started talking with my friends about crypto constantly, and they got to the point where like, dude, you need to find someone else to talk to about this stuff because we can't listen to it anymore. And I was like, I'm watching all these people on YouTube, and I have like all these thoughts and things I want to talk about that these people aren't talking about. I was like, I should just start up my own channel. So I started just making videos, and I didn't really know what I wanted to make videos on at first. I was talking about all kinds of different things, stocks, crypto, whatever. And finally just came to the point where I started talking about Ripple, the company, and XRP, the digital asset. And it always was the thing that fascinated me most, but I didn't know was going to be the thing that fascinated other people the most. And then very quickly, I just kind of developed that niche in the market, and people loved it. So that's kind of what I've stuck to since.
Yeah, I love you shared with me that you during your job you would go. Was it during your lunch hour?
Yeah.
Tell that part of the story. That's great.
Oh yeah. So there came a point in my career in the kind of the YouTube side of things where I kind of got this feeling like I either had to like lean into this like with everything I had or keep as like a side hobby or something I did part time. And one day during lunch, and I loved my previous job. It was incredible doing the surgical robotic stuff, but I got the sense that I like really needed to put more time and effort into YouTube if I wanted to get to where I wanted to go. And I started just live streaming during my lunch break in the parking lot. And at first I was like no one's gonna like this. Like this is so weird. Like I'm just in my car at work. And people loved it. And now I'm live streaming like from my office, like in a full setup. And people are always like, go back to the car. You missed the car. So at that point, I already accepted. Like one day I might get a call from HR and be like, hey, like we have to ask you to leave. Like you can't be live streaming in the parking lot at like the place I was at. Like some of the stuff was pretty confidential. But I was like, you know what? Like, I'm either going to do this and get that call from HR and be like, I'm happy I took this risk to build out my YouTube channel, or I'll get to the point where it leads to me to so much more success that I'll just be able to leave my other job. It got to the point where I wasn't fired, which was cool. I got to step down from my position. You should have seen the engineers' faces when I told them I was going into cryptocurrency, YouTube, as well as wealth management. They were absolutely shocked, but it was a cool transition and ended up working really well. So it was cool to kind of take a bet on myself and take a risk, and it worked out.
I love that. Out of curiosity, what was the length of time between when you started to when you left and did it full time?
So I started YouTube in 2021. Just making videos, didn't really get any traction until like 2022-ish. Started doing the live streams, which has kind of been like a critical thing that I do only like 6 to 8 months ago. And then probably 3 months ago. So it's probably only live streaming for like 5 months before I ultimately left. And it was perfect timing because like summer just hit in the Northeast and like live streaming in the car was not as fun when my car was 92 degrees and I was getting in there for my lunch break and covered in sweat. So it was a perfect opportunity for me to be like, all right, time to do this from the office.
I have to ask, I still have my entrepreneur hat on. What's the biggest YouTube hack that you have to get higher rankings with your YouTube videos?
Well, being in the sector I'm in, it's like I am like shadow banned in as many different places as possible. So it's always kind of crazy. Like, I get like 15 to 20,000 views a video, but I only have like maybe like 55,000 subscribers. And most of the other big people, if they have like they'll get like 20,000 views on like 1 million subscribers, which I understand, right? Cryptocurrencies are still like a niche, high risk thing, so YouTube doesn't want to promote that in the algorithm. But just um I don't know, being able to interact with your audience was something that I didn't do for a long time because I was like didn't know how I felt about doing live streams and stuff like that. So that was like a big thing, being able to do live streams and talk with people and get to know my audience because I found the more I could get to know them, the more they were willing to go tell other people about me because they felt like they knew me personally. And then just sticking to a niche and just like focusing on what's important to you and understanding that people are there to watch you and learn about your personality. And if you try to do what other people want, you kind of just lose sight of why people are there in the first place, which is to learn from you. So, just trying to stick true to myself and provide as much value to people as possible, but always making sure to kind of keep it in kind of my own vision. And because that's why people came to me in the first place.
Right, that's really interesting. So keeping a pulse of your audience through the live streams and actually communicating with them. That's okay, very interesting. All right, let's dive in. I want to get into the crypto space. Um, First and foremost, where do you go to do your research? Do you have like some key sources? You're so well articulated and knowledgeable on all these different. And I'm like, where are you? How are you finding this? What is your methodology for researching?
Yeah, so I just have people I follow and they just provide excellent research. And to be completely honest with you, like people think I do a lot of research. I don't really think of myself as a researcher. Like I'm very good at like accumulating all the different research other people do and like picking what I believe is important and developing investment theses based off that information. So I just through following people and like understanding that I can't be a researcher and doing all this other stuff. Like I need to rely on other people's research. But I follow maybe like 100 to 200 different people, and that's ever expanding, that are providing just excellent research. And even if I only think that 3% of their posts are actually valuable to me, if I can combine 3% of each researcher's posts into kind of a holistic view of what I think is important for people to understand, then I'm just using my own expertise and kind of understanding this digital asset space to apply the research or present the research to people that I believe is most important. So, a lot of what I do is really just looking at respected researchers in the space and then pulling from them what I think is most important for people to understand. And that's kind of been a really good way for me to scale a lot of what I did because just not trying to be an expert in everything. Like there's people who spend their entire day digging and finding documents and finding interviews. And if I spent all the time doing that, I couldn't make content. I couldn't do some of the other things. So just relying on those people to be experts in that and then leveraging their information to help condense it for people to understand.
Well, and like you said, coming up with your own hypotheses, and sounds like you've been pretty accurate with what you've predicted in the past. Before we move on, do you have any people that you follow that you want to give a shout out to? I'd be curious to know who maybe some of their top people are.
Yeah, no, of course. There's a guy named Darren Moore Jr. On YouTube. It might come up as XRP Darren, and there's very few people because I focus heavily in the XRP community and Ripple. There's very few people I still watch on a daily basis because I'm just like I see all the stuff and then I have to put my own perspective on it. But he's one of the people who just blows it out of the water. Like he pulls interviews with like two central bankers and a Ripple executive like in a Zoom interview, and I'm just like, how did you even get like how
Yeah.
did you even obtain that? And I'm sitting there watching it, I'm just like, no one else has this. So like the stuff he's presenting on a daily basis is incredible. There's another guy named Smoke over on X, and he is constantly pulling old documents that were just like never made to be public, but they're just high level business plans like from Ripple. If I find his account right now, I'll drop the actual tag. But it's just stuff you'd never expect to actually lay eyes on. And when you can kind of look at what the high level business plan is internally for some of these companies, it really helps you digest what their plan is to go to market and create profit and get mass adoption going forward. And you get to see like the internal stuff rather than just a public announcement. So his thing is at SMQKEDQG. So kind
Oh,
of a
jeez.
complicated one,
That,
but
yeah, that's a hard one.
yeah, hopefully
Why
people
would you
can
do that to
replay and
yourself?
get that. But there's so many people out there,
Right.
and I always tell people if you ever like are curious, just go to the people I'm following on X. It's at XRP Mickle, and just look at who I'm following and just go click on people's accounts. Like you'll find a plethora of great people just by doing that.
That's a good point. Um, Share with my audience, if you would, please. I would say that, I mean, I've spoken to a number of the people in my audience, and they would range from beginner to maybe early intermediate crypto advocates. I've mentioned XRP plenty of times on this podcast. I think my audience is pretty clear on my personal opinion about XRP. But why is there, quote unquote, an XRP community? Explain that, as opposed to, I mean, I guess there are Solana communities and other things like that, but the XRP community is, they call it the XRP army for a reason. Explain
Yeah.
that, if you would, please, because there's a lot of significance to that.
Yeah, so I think it just goes to the group of people who get involved with XRP. So there's like two different main ecosystems I see in crypto. There's the kind of like ultra libertarian movement where it's a lot of we're going to create a new financial system, we're going to be like sovereign citizens, and we're going to use these currencies to disrupt the government, and we're like taking full financial power. And like that's where a lot of the Bitcoin ethos came from and a lot of stuff like that, which is something I fully subscribe to. So I'm a big Bitcoin holder myself and something that I find fascinating. But through developing an understanding of the tech and understanding that, hey, this is more than just like a social movement. This is like a transformation in the rails to the financial system and how money's going to move. It was very easy for me to see, well, in the same reason that I want to use a decentralized neutral currency that can be moved from point A to point B in a couple seconds for fractions of a penny, like financial institutions are going to want to use this stuff for the same reason. And
Hmm.
financial institutions require an onboarding process. It's not like me and you where we just go and find something and we're like, oh, I'm going to build a business around that, right? They need centralized software made for them. They need to see a board of directors to onboard them. They need a relationship with a firm. And I saw what Ripple was doing, getting people like Rosie Rios, former treasurer, former BlackRock employees, former JP Morgan employees, people at the top who could get them in the room with some of the large central banks and banking institutions. And once you kind of comprehend the value of these digital assets and moving money, it was very clear to me that they were probably going to be able to make significant headway in getting these digital assets adopted at an institutional level. So, in my opinion, the XRP community is really just a group of people who sees a vision for cryptocurrencies on an institutional level, a use for cryptocurrencies and kind of revolutionizing the way we move money and the deep networks built in our financial system, and just bringing them into the age of the internet. One of the creators of the XRP ledger, David Schwartz, he said, regardless of if we ever see anything come out of cryptocurrencies and whether or not this technology really ever gains mass adoption, the one thing you need to understand is the rails of our financial system are severely outdated and they are going to be disrupted and replaced by something. Whether or not it's
Hmm.
cryptocurrencies, and this interview was 40 years ago, he said that's still up for debate. But the one thing you need to understand is that the rails of the financial system need updating, and I'm yet to see another technology since he said that has even come close to what cryptocurrencies are doing to fix that system.
Yeah, anyone that's in the know sees the trajectory of XRP, but I'm wanting to illuminate that more, for my audience and anybody else who might be a new listener to this podcast, of just how monumental and how massive this undertaking is. But how do you reconcile um, the intention to be sovereign and the libertarian type Bitcoin ethos with the XRP community that is really embedded with a lot of the old guard, if you will, who some would argue would say that they were the ones that were trying to take away that freedom and independence.
Yeah, I mean, I think it's a little bit mixed because one of the things I've noticed in crypto is like people will see what a single person or institution will say and think that that applies to like every other banking institution out there. Like if you talk to like 99.9% of the banks in the world, like they hate JP Morgan and like they hate these larger banks. Like these smaller banking institutions are getting their lunch eaten by the big players. So just because Ripple's like working with like a lot of banks and financial institutions doesn't mean that those banks and financial institutions they're working with are necessarily right like those people who are like creating the centralization and the corruption. In fact, a lot of Ripple's early partners were people trying to get out of that banking cartel because they were smaller institutions essentially being abused by the larger institutions. So I think it's multifaceted, and I think ultimately you're going to see the big players capitulate and come on to this new system as well. But it's going to be the players who have the most to gain from leaving the old system that are going to come onto the new rails first. It's not going to be the people who control the old system because they get all the resources from controlling that system. They don't want to see a
Mhm.
player like Ripple come over. So as much as I see a lot of it like, oh, like Ripple's working with the banks and stuff like that, it's like a lot of these banks are also kind of thinking the same thing as you. They're in a position where they need to get out of this entire system controlled by the one, two, three big players. And they're looking to leverage new technologies to help decentralize and level the playing field. So,
Mhm.
um, I believe to a certain aspect that the idea that there wasn't going to be any banks or financial institutions in the future, I think that might have been a little unrealistic. I think Bitcoin was absolutely monumental in getting people access to financial products in countries that didn't have that infrastructure. But countries like the United States, that infrastructure is never going to go away. Most of the people I talk to on a daily basis, they might not love their bank, but they see the deep utility of having it. And if I
Mhm.
told them, hey, you're not going to have your bank anymore, they would just be confused. So I think
Mhm.
we're going to have a more of a partnership between the financial institutions and the rails of this new system working together in the United States. And I think we're starting to see people understand that in a greater capacity nowadays.
Yeah, the more paranoid of my friends will say that, it's possible that XRP is like a Trojan horse, and it sounds all nice and everything, but in the end of the day, it's going to be centralized, and it's going to be, the end of us kind of a thing, the control, etc. And I'm like, how do you not know that it's a Trojan horse in the other regard, where it's, shaking hands with some of the old guard, but really is liberating, like you were saying, essentially opening up this whole ecosystem to have more fair, just play. So,
Well, also, if you wanted a Trojan horse, wouldn't the perfect Trojan horse be Bitcoin? Like, if you were really to make that argument, you would market to everyone the decentralized libertarian viewpoint and funnel everyone into this one asset class who had those views or that's one cryptocurrency. And then you'd flip the switch and pull it out from under them. And that would be the Trojan horse. Like, the
mhm,
Trojan horse wouldn't be something like XRP, which was always clearly marketed in this direction. So I always think it's funny when people kind of have those views. It's like, well, if their goal really was to like trap you into one of these systems, they would be marketing it just like Bitcoin's being marketed because that's who's attract all these people who think this way. I don't
mhm.
think either one of those is necessarily how we go down this path. I don't think either one is realistic, but I think it's kind of a funny counter argument to that view.
Yeah. Is it my understanding that the Satoshi wallet that started obviously with Bitcoin also holds a large bag of XRP? Is that correct?
So we don't know specifically. We can't see the wallet, but David Schwartz, the creator of the XRP ledger, was also one of the first creators of Bitcoin. We don't know where he sits with Satoshi himself. I would bet that he probably knows Satoshi and or could be one of the Satoshis. But one of the cool things about the Ripple SEC case is we got privy to a bunch of information we would never get to see. And one of the lines in that deposition is David Schwartz saying that he believes it is highly probable that Satoshi owns an enormous amount of XRP. So that was under deposition in the Ripple SEC case. He's someone who was there working with a lot of those people in the very early days. And if you read the context of the quote, and I don't have it on me right now, It sounds very much like he does know that Satoshi was holding XRP in the beginning. And then there was also an email from Satoshi himself that specifically stated that XRP was one of the few cryptocurrency networks, or the XRP ledger, doing something with trust besides centralizing it all in one point. So I think that's kind of funny right there, because as you've probably heard, a lot of the Bitcoin native people like to talk about XRP being centralized, but Satoshi himself recognized, I think in 2012 it was, via an email, that the XRP ledger was one of the few technologies that was moving towards a trustless, decentralized system at the time. So
Mm.
it's funny kind of how that gets lost in the entire story, and it's more Bitcoin people creating a narrative that might not even be in line with what Satoshi himself would be thinking if he was around today to answer some of these questions.
There's so many things that are happening in this space, and certainly in world news holistically. But there's so many things in the crypto space that really is nuanced that you don't pick up. It's not in the headlines, it's not in the articles, but it's only when you are tapped into it where you understand. You see the puzzle pieces being laid down, and you start to make the connections, going, "Oh, this is what they're doing," or "Oh, these are who are against this, movement, et cetera." And it starts to shape everything out, so it makes it very clear. So it's very interesting that that testimony. I'm surprised he didn't look at the camera and wink, at the very end.
Yeah,
Uh, so
exactly.
let's talk a little bit about, you mentioned the SEC and the case with Ripple. Um, in some of your recent videos, you talked about a possible appeal that the SEC, of course, lost to Ripple for the most part. Was there, what's the status of that entire case right now?
Yeah, so the biggest thing we learned from the case was that XRP, the digital asset, is not the security. And just to explain this real quick, it's one of the biggest things people get hung up on. Um, Really, the only time you typically have a security is if you have some kind of contract linking a sale of one thing to another person. Now, Congress went a step further, I forget the year, to actually designate stocks themselves as securities. But based on the typical Howey analysis, it's typically the agreement between one party and another that creates the security. So the judge in the Ripple SEC case determined that XRP itself was not a security, but in Ripple's transactions, they sold to a small subset of financial institutions, and that transaction was a securities contract. So right now, Ripple's paying a fine based on those sales. They restructured their business so they don't violate those rules going forward, and all of that should be wrapped up hopefully at the end of the summer. But the important thing to note about all of it is XRP itself is not a security. Ripple's business is completely unaffected by the ruling because they can now move forward using XRP as a digital currency. And that was kind of the massive win that Ripple got. Now, a lot of people had speculated that the SEC was going to come back and actually appeal it and take it to the Second Circuit. But the thinking on that has changed a lot. The SEC lost really bad in the Ripple SEC case. The judge was very critical of not only the SEC's arguments, but kind of how they managed the case. They were caught lying a couple times. They were caught making up facts. And ultimately, the judge came out and said that the SEC lacked a faithful allegiance to the law. So the SEC was hit hard in that case. As a very honest person just watching it, really didn't find a single thing in 10 years of Ripple's business that made me think once, like, hey, why was Ripple doing this? This is kind of sketchy. I mean, it was actually incredible how buttoned up they were from 2013 on. And ultimately, the SEC, it's not the SEC's best case to take to the Second Circuit because of these reasons. The SEC currently has a case against Coinbase. That is a much better prospect to take the Second Circuit. And I believe they're ultimately going to say, hey, look, we got our win on institutional sales. Yes, XRP isn't a security, but who cares? Congress is already likely going to come out and make these cryptocurrencies not securities. Let's just go try to win on the exchange front, or let's try to win on staking. So I believe they're going to 180, take Coinbase to the Second Circuit and let Ripple go and say, look, we got the institutional sales. We'll take that win and just get out of this mess, because The SEC can't bring new facts to the Second Circuit, and they didn't have any good facts in the first case. It's not going to get any better in the Second Circuit.
Yeah, I think you mentioned in one of your videos that they have enough egg on their face already. Why would you take it to the Second Circuit and get completely blown out again? So yeah, that would seem to be unlikely.
And it could
Um,
also create really bad case precedent for them also, because think about it this way, like if
right.
you lost a case miserably in the First Circuit, then you're taking that to the Second Circuit, it's just becoming more and more binding. Like you want to take a case to the Second Circuit that you're very confident in and have good facts for so that you can create binding precedent over the rest of the industry. It's like you would never want to take your worst case to the Second Circuit or the Supreme Court, because that gives you the highest risk of just regulating yourself out of existence. Like the perfect case to take to the Supreme Court would be like the Terra Luna case, something that's like a slam dunk for the SEC where they could show
Mhm.
fraud or something like that. Taking someone like Ripple the distance would be catastrophic. It's like, why would you take the one player who did everything to follow the rules and presented facts that clearly showed that XRP was not a security? Like, that's not the case you want to take to the Supreme Court if you're the SEC.
It's such an upside down world where the SEC is the one that's having to back off because it's like yeah, it's funny. So,
Incredible.
what is their case against Coinbase?
So the case against Coinbase is essentially that Coinbase was once again listing assets that were unregistered securities. I think that's weaker, but
Okay.
I think the stronger argument they have against Coinbase is that Coinbase was providing staking services. So you were giving your coins to Coinbase and Coinbase was providing you a return on those coins. And because Coinbase was a middleman in providing you that return. Essentially, you are relying on Coinbase's efforts to create that return, and therefore the contract between you and Coinbase to produce those yields, that contract in place would be a security. And that's where I like to really get people thinking, like I said earlier, about the agreement or contract in place rather than a specific asset being the security, because
Yeah.
that's where the SEC actually does have some decent points. I'm not going to say I think the SEC is right or wrong in their argument. I think it's much stronger than trying to call the asset itself a security, going
Mhm.
after some of these obligations that people like Coinbase are making. But it's just going to come down to how the judge looks at this. And we're going to hope we get a cryptocurrency friendly judge who's willing to, um, I don't know, make some case precedent on staking not being a security. But ultimately, to me, I don't think it makes too much of a difference at this point because I believe we're going to have clear rules and regulations in the next year or two where all this stuff will get cleaned up anyway, regardless of what the SEC tries to do here.
Speaking of cleaning up, let's talk a little bit about Tether
Yeah.
and stable coins. Explain to those who are, not tapped into this whole issue what the issue is with Tether, why there's controversy around it, and potential corruption, and then tell us what you think is going to happen with that whole asset.
Yeah, so a lot of people think like Tether is going to go on some like death spiral into peg or do something like that. I don't personally see that happening. Very well could happen. No one expected it to happen with Terra Luna, and it did. But Terra Luna was also an algorithmic stable coin, and that caused it to kind of funnel on itself and death spiral. Theoretically, Tether just has a bank account with some amount of money in it. People speculate if it has all the money the stable coin's valued at, whatever. It has some money in it. We do know from people who work with Tether that there is, in fact, a substantial amount of money in that account. So I don't see Tether necessarily death spiraling like something like Terra Luna because there is ultimately treasuries and dollars backing up the coin to a certain degree.
And
With that said,
how is the price of Tether? Is it algorithmic? How does that
no, it's
work?
just linked one to dollars. So
Okay.
you give
Okay.
Tether a dollar and they say, okay, we'll issue a digital dollar. You want to pull that Tether out, we'll issue your digital,
Got it.
we'll issue your dollar back. So that's
So
what I
there
try to
can't be
tell them.
there won't
Go
be a
ahead.
hostile attack then, because Luna was more of like a hostile algorithmic attack, right?
There was no money backing it up. It was based on algorithms. So the second that algorithm went out of line and you had the collateral drop substantially, essentially you had the
Through
coin
everything.
unbacked and it was a death
Okay.
spiral. Because the
Got it.
collateral is a stable unit of value in the Tether case, you can't really have that same death spiral. In Terra Luna's case, you had the value of Luna itself, which was the collateral dropping rapidly. And as that collateral dropped, the coin depegged because essentially you didn't have enough assets backing up the stable coin itself. In
Okay.
Tether's case, so long as there is money in the account, which all indication is there is money in the account, then you really wouldn't have that death spiral. Now, with that said, what I do believe is going to happen is Tether is going to push themselves to kind of the dark web of crypto. So the same way as we have the black market, where you can buy all kinds of illegal stuff, I think Tether is going to push themselves into kind of that area of crypto. I don't think they're going to go away. I think they're going to keep hiding in kind of places where there's no extradition laws. And I think they're just going to keep Tether out there as kind of a, hey, this is the dark or blacklisted coin of the cryptocurrency market. I think players like Circle and Ripple are going to embrace regulations and issue stable coins that large institutions are going to feel comfortable using. And for me, that's just where I would like to take my bets, right? I believe that's going to be a lot bigger in terms of a marketplace and in terms of an asset class, in the same exact way that things like Amazon and Google search are much bigger than things like Tor and some of those other internet browsers and services on the dark side of the internet. So I think that's like how it's going to pan out. It's not to
Mm.
say there isn't utility in the dark web, like there clearly is, and even things that aren't necessarily nefarious still happen on the dark web that some people can get tremendous value from. So I think Tether will still provide that value to people who see value in using that service. But I think the larger institutions are going to move to a more regulatory compliant space, and likely that market cap will dominate things like Tether going into the future.
That makes sense. You said that Tether was backed by, a stable asset, and in my mind, I had quotes around that stability because obviously the dollar is being devalued and debased, and um, there's speculation. I believe it's speculation. I'm not as close to this as perhaps you are, but I had Versan Alzra on not too long ago from Black Swan Capitalist, and he was talking about the likelihood of essentially like a Ponzi scheme between the U.S. dollar, Tether, and the bond market. Are you familiar with this alleged corruption? Is this what is the story of that?
So there certainly is some speculation on that front in terms of how I to me it comes back more to like are treasures are Tether's digital dollars backed by treasuries, yes or no? And to me that's like the big question here, because it's actually a very simple business model, as I stated earlier, right? Like you have a bank account, you hold collateral in it, and then you issue the collateral on a blockchain to create a stablecoin. So if you have $1 inputted from, say, a customer, then you just issue $1 on the blockchain, and then boom, you have that linkage. To me, the only real question here is, does Tether actually have those dollars? They've refused to get audits, whatever, which is obviously extremely sketchy. They claim that no one wants to audit them because of potential liability going into the future, whatever. But then at the same time, you have these massive financial managers coming out. Something Fitzgerald, Cantor Fitzgerald, I believe. And their CEO came out and said, look, we work with Tether. We hold their treasury account. We see the treasuries there, the collateral's there. So it's one of those things where I think we're just gonna have to wait and find out. But to me,
Mhm.
the equation is very simple, right? Like, are there reserves? Is there a backing? And if there is, then hey, it's probably not going to be a death spiral. It's probably just going to get pushed out into another part of our financial system, and the big players are going to be let in. I don't think there is any doubt in my mind that the large institutions in the United States are not going to be using Tether. They're going to be using Circle and Ripple's new stablecoin. So a lot more money is likely going to flow into those networks because Tether has no interest in complying with the things that the United States regulators are asking for.
Yeah.
So it's kind of a nuanced view, right? It's kind of in the middle of, hey, Tether's going to be perfectly fine. They're going to keep running like they've been running before in the past. And between Tether's going to death spiral, go to zero, and fall out of existence. I believe they're going to stay as an important player in a different part of the financial market than the Ripples and Circles are looking to play in.
Gotcha. Let's switch gears a little bit and move on to tokenization. How big is tokenization? It's something that our analog minds have a hard time grasping, I think. But let's explain how massive this is and also why it's happening.
Yeah, so It goes back to something I talked about earlier, when I was talking about the David Schwartz quote when he said, "Hey, if you don't take anything from what I'm talking about in the interview he was talking in, just understand that regardless of what happens to cryptocurrency, the banking system and the financial system is poised for significant disruption." Tokenization is just another aspect of that disruption. So being able to own your own assets and issue assets in a tokenized form allows these assets to be utilized in all kinds of ways that isn't possible today. Right now, we're essentially running a digital system with all these things issued in that digital system that don't have any real ID in the system. They don't have any real value. It's just pegged to value in centralized off internet systems. And it just creates a broken mess of intermediaries and all these different players who are essentially assigning value to these things and providing custody for the value. But it's all broken. There's no inherent value for the thing itself. There's no
I
act. Go ahead.
sorry to interrupt you. I understand that, but let's break that down really quickly in a simple example.
Okay. A great example of it is the stock you hold in your brokerage, right? Like there is technically a stock certificate associated with that. And that's the thing that has the value, right? It's the stock certificate. But that's not issued at the exchange itself. You're just trading a digital representation of it that has absolutely no value. If that digital representation was deleted, you wouldn't have the stock certificate. So there's no actual value of that digital representation on the exchange. All the value is in the stock certificate. Tokenization takes the ability to have that digital representation and combined it with the stock certificate. So the actual ID, the actual value of the thing you're holding is inherently within the digital representation. And so um, it gives you the ability to say you were holding a stock with Charles Schwab or holding a stock with Goldman Sachs. You would be able to take that value, take that asset you have with them, and then hold it under your own identity in something like a wallet. And there is no need for some kind of certificate on the back end because the inherent ID and the inherent value is within that digital representation that you just took ownership of via tokenization. So I know that's kind of a complex thing to really wrap your head around if you're new to this, but it's all about creating inherent value in the internet rather than relying on value from some kind of outside world, something like a stock certificate on the back end. It's
Mhm.
creating that inherent value within the internet itself. And we're looking at people like BlackRock right now saying that they're looking to tokenize hundreds of billions of dollars worth of value because they understand that in order to make these markets more efficient and move more seamlessly, you absolutely need the ability to create that value on the internet itself. And that's really what tokenization is.
Yeah, and I would take that just one tiny step further on the blockchain itself, which is the revolutionary technology that allows these things to exist in that digital format. Um,
Yep.
so let's talk a
And
little bit.
companies are gonna, just like real quick, companies are
Yep.
gonna have their own proprietary um private blockchains as well. And like BlackRock is probably spinning one up as we speak. But ultimately, BlackRock's going to need to be able to interact with Charles Schwab and Bank of America and all these different places. And that's where the public blockchains come into play. In order to create a marketplace and an internet of value and interoperability and a network effect, you need a public solution. So I believe every single private organization is going to tokenize assets on their own private blockchain. And then ultimately, those are going to hit the public marketplace as we create interoperability and an internet of value that interconnects all these closed walled garden repositories.
And what ledger do you think that's all going to be sitting on top of, Connor?
Well, me personally, I believe the XRP ledger is poised to get a lot of this value, and it really doesn't have to do as much with technology as many people might think. It's just because, like I talked about earlier, most of these organizations like need to talk to professionals in order to incorporate these solutions. They want to know that there's a board of directors and a responsible management team that's like building out these next generation systems. And I just think Ripple, out of any other company out there, has done the best job of bringing in professionals with deep knowledge of the past financial system to incorporate the new one they're building. I mentioned this early. People like Rosie Rios, former treasurer, people who used to work at BlackRock, people who used to work at JP Morgan, compliance people. All these people sit on the boards of all these different institutions. And I don't necessarily think that's a coincidence. I believe they sit on the boards of JP Morgan and Ripple to help develop that partnership for ultimately interoperability going into the future. There will be a lot of protocols that play a place. It's just that there's probably going to be 5 to 10 that dominate.
Yeah, so BlackRock obviously manages upwards of, I think the last estimate I heard was over $10 trillion or something like that. So if you can imagine the tokenization of all of those different assets to the tune of likely trillions and trillions of dollars after it's all said and done, if a large majority of that is going to be sitting on the XRP ledger, and utilizing therefore the XRP token, I'm just wanting to illustrate just how big an opportunity this is to just simply step in front of that wave.
Well, I'll take it a step up too, because it's more than just assets itself. It's also debt. And debt's going to be tokenized just like any other asset. And we're looking at quadrillions of dollars of debt and derivatives together on top of the assets. So some of this is way, way bigger than people can fully wrap their head around, because these markets so far and how they've been built out have not been transparent at all. And for the first time ever, as we tokenize these things, we're going to start realizing a lot of value publicly that we might not even have known really existed. So I believe we're going to watch the tokenization of every kind of thing we have in the system, whether or not it's asset backed, whether or not it's something like debt, and it's going to be things we can't even wrap our head around right now. Like when the internet was created, it opened the door for things no one thought could ever even exist. So things like the tokenization of time and things that theoretically is
Hmm.
hard to wrap your head around, but they're going to be things that have value associated with them that you can't even value today.
Hmm. That's really interesting. How would you tokenize time?
I don't
What
know if I
things?
have a great example for you off the top of my head, but just being able to tokenize your kind of time in terms of workload, and you might be able to loan out certain amounts of your time to
Hmm.
people and have that time actually trade on a marketplace. So rather than me having to specifically market my value to you, say this was not the case, but say I charged you $100 for this interview and that was just my flat rate. Well, maybe there's a marketplace or a tokenized version of my time where people could actually bid on that specifically. So maybe I'm severely undervaluing myself. Maybe I should have been charging you $500 for this interview. Rather than me trying to make up an arbitrary value for my time, the marketplace itself would create a dynamic
Fascinating.
marketplace where people could bid on that. And that's just a crazy example. But like David Schwartz himself said this, like no one thought the internet would one day be used to send people memes of dogs back and forth. And obviously the
Right.
internet was used for much more than that, but no one had any idea Uber was going to be a thing and you'd be able to get a car instantaneously. So the same thing is going to happen with tokenization, and things are going to be tokenized where right now it just sounds like insanity or something I can't even think of, and it's going to become common practice in the next 10 to 15 years.
Sure. Explain the utility of the automated market makers and how that's going to play into all this tokenization.
Yeah, so automated market makers are just a new and improved way to create liquidity. So to transact one asset to another. It's a little hard to explain without a visual aid, but one of the best things about XRP is it's just neutral liquidity in the entire system. So you can think of a very liquid pairing right now, say going from US dollars to euros, right? You're probably never going to have a liquidity issue there. But if you were to go to an obscure liquidity example, say a rare piece of art to like a milk derivative, right? Like there's probably almost no liquidity in that corridor. So it'd be hard to find buyers and sellers looking to facilitate that. But when you can just go from that rare piece of art to something like XRP to something like the milk derivative, well, XRP can be liquid to both those assets, and thus both of those assets are liquid to one another through XRP. So rather than what we have right now, which is a complex web of one asset linked to this, another asset linked to this, another asset linked to this, and everything crossing over and having all these different strings pointing to a million different things, you just have XRP in the middle and all the assets linked to that central liquidity source. So XRP ends up being the liquidity for all the assets tokenized, and you don't have to create all these intricate liquidity relationships between all these different assets. You just need to be liquid to XRP and you're instantaneously liquid to everything else. Now, that is a very high level overview of what I believe the strategy behind the automated market maker is. not a technical discussion of what the automated market maker does, but I believe that's really the most important thing you can take away from what's being built out here. It's a new way of creating liquidity between assets that typically wouldn't be liquid to one another.
Okay, so I hope listeners are grasping, if they haven't already, just how big XRPL is going to be in is central to the technology that's being built out right now. Um, let's bring it down to brass tacks here for those that actually hold XRP, which currently is like at 50 cents. Um, let's say it goes up. You had a very fascinating video where you talked about exit strategies and why people need to think that through. Because if you're liquidating, if all of a sudden you had $10 million worth of XRP and you're like, hey, I made it, I'm going to liquidate it, and now I'm in cash, and that cash is being devalued on a daily basis these days, that may not be the best solution. So we've talked about automated market makers. Now let's talk about exiting XRP and how potentially that might play into an exit strategy for long-term wealth generation.
Yeah, so just so people know, I'm actually a registered financial advisor. I work at a company, Digital Wealth Partners, right now, and we look to help people through this exact thing. So walk you through a high level really quick at what we look to do. We believe every single person needs to start on a strong legal framework. So the same reason why you set up a business with an LLC, we set up an LLC for your digital assets. So your digital assets are removed legally from any liability yourself, as well as the fact that you can then write off expenses in the digital asset space against your digital assets. So we all have expenses we incur on a yearly basis in the digital asset industry, being able to write off against those. On top of that is institutional grade custody. So rather than holding on an exchange or on a ledger that are susceptible to all kinds of different things, we hold with the largest institutions out there, Ripple themselves and Anchorage in the United States, to allow you to get actually up to $100 million of insurance on your account so that you have
Mm.
sophistications that you're just not privy to on an exchange or in a cold wallet. And the last part of that is the advisory, which specifically goes to the question you are asking. One of the things we are working with people to build out in the future is really just what the richest people on earth have been doing their entire lives, right? Have you ever wondered why Elon Musk and Jeff Bezos, they don't pay taxes? Well, the reason they pay taxes isn't because they're breaking the law, it's because they don't sell assets. And it's funny to me because a lot of people's strategy going in to this liquidity event where they gain a lot of value is to liquidate it all and put it all into cash. Well, right there, you are going to give yourself an enormous tax burden, and then all your leverage is gone. All your assets are depleted, and now you're in a depreciating asset, which is the US dollar. Now, if you have a ton of outstanding debt and you can use those dollars to create a benefit in your own life, like getting rid of that debt, paying off a mortgage, that's a great use of those dollars. But if those dollars are just going to be sitting in a bank account doing nothing, that's a horrible use of those dollars. So, what we're looking to do is help people actually take loans against their assets, which that loan you take against your asset is tax free. You get the liquidity without having to sell off any of the assets themselves. And if you
Mhm.
combine that with the fact of being able to use those assets to generate yield, you can actually take out a loan that is tax free against your assets where you don't have to liquidate anything, but then use the revenue potential of the assets themselves to pay off that loan. If you combine that with the fact that you can write off any of the expenses alongside of this against the LLC, you're starting to build a comprehensive framework of how the richest people in the entire world are able to accumulate, keep, and store wealth without paying massive amounts of taxes, and then ultimately passing that value on to the next generation. And the last thing I want to do to put a cap on all of that is when you pass these assets on to the next generation, there's no capital gains implications on them. So whoever is inheriting those assets, your XRP up 10 to 100,000%, those people will be able to actually sell off a portion with no tax implications, cover whatever estate and debt you had outstanding, and then live their life going forward with essentially a digital asset up hundreds of thousands of percent that didn't have to pay any taxes on it. So, that's what we believe is going to be kind of what the people do who really do have an appreciation for building out sophisticated plans. We hear about people all the time. They have price targets. They're going to sell everything here. We just think it's so important that people understand there's a lot of different ways to go about this. And we believe a sophisticated plan for many people is going to be critical to have.
Um, so you mentioned a second ago about the revenue that you can create off of the asset. Explain how that would happen. Are you talking about through staking?
So it all depends on the assets themselves. Some assets do have native staking protocols, and other assets like XRP don't. But what XRP also has is deep utility in the cross-border payments market. So in the same exact way that Ripple loans out XRP to customers to use XRP for cross-border payments, we're going to be able to facilitate that too going into the future. So the important thing to understand about digital assets is they have deep utility, and people will pay you to use your digital assets for that deep utility. And to be completely transparent with you, it's because that they're going to offer you 8 to 10% or whatever the number is to get access to your digital assets. They're going to make 30% or whatever they make, but you still get paid out on not having to do all those different things to facilitate that yield. So the digital assets have deep utility, and we're just looking to work with institutional grade partners to allow you to build out those relationships. We're able to get institutional grade deals for people and deal flow that you're just not privy to when you're dealing on a retail level. Once you kind of step up into the institutional space, then you get all kinds of deal flow that most people wouldn't be privy to be able to lend to financial institutions that are using the assets to generate income.
So just to be clear, I was going to ask you about the institutional relationships. You mentioned XRP storage on Anchorage and Ripple itself.
Yep.
I'm assuming that's an institutional relationship that you have with them, or can anybody can
No,
I?
yeah, there's neither of these are partnerships that you can create unless you're deal. We were actually the first firm ever to have an institutional relationship with Ripple to give retail clients the ability to secure their XRP in institutional grade custody. They'd never dealt with retail before, and we're the firm that opened that door. And we had we'll probably have close to 60 clients being onboarded into institutional grade custody right now with Ripple themselves. And
Amazing.
one of the most important things that people need to understand is like, we're not ever going to hold your crypto. And it's not even really Ripple who's holding your crypto. It's almost just like Ripple holds the ledger, but you still have the ability to cryptographically sign. They don't. So it's still your account. It's in a segregated vault. You have full control over that crypto. It is your money. It's just that rather than having your money on a $50 ledger, you have it on a $100,000 ledger with multi-million dollars of R&D going into it every single year.
Fascinating and great explanation. Is there a minimum that retail investors would need to have to work with
Yeah,
you on that?
so the minimum, it's a three-stepped approach, and we can stop at any level. Even if you don't meet the minimum for the institutional grade custody, I still think there's many advantages to even getting something like an LLC set up. But the minimum for institutional grade custody and advisory is $100,000. It's $100,000 US, not 100,000 of a certain coin like XRP. And that's just because we believe a lot of people over the next couple of years will be able to move into a position where they do accumulate portfolios of $100,000, but that's the minimum. And it's really set by our institutional partners. They don't want to onboard vaults and clients with insurance for things less than that. So that's kind of our minimum there.
And does it store all assets or is it only XRP?
We can do a very, very large swath of assets over there. It's ever expanding as we have more and more clients come in, but we can do your XRPs, your Bitcoins, your Ethereums, your XLMs, your H bars. I would say we could probably do like, unless you have a really long tail and you're someone with 90 assets in your portfolio, and a lot of them are in the bottom 5,000. We
I'm such a sucker for some of the new ones that are 0.000. You know, it's like when you're first getting started, you're like, I'll throw $100 at that. So yeah,
yeah.
I have a decent tail.
But we tell people, right? Like for stuff like that, like there's really like not as much utility as coming
Sure.
for coming under us, right? Like
Yeah.
I don't think a lot of people have fears of holding those things in their own personal wallets or on exchange. Like it's not material enough. It's really the people who have hundreds of thousands, if not millions of dollars sitting on an exchange or a flash drive under their bed, right? Those are the people who
It's
really see deep.
scary.
Yeah, those are the people who get deep utility versus for having vaults with up to $100 million worth of insurance on them.
So I didn't even know that you did that. I'm so grateful that we had this conversation because I know several people personally that are going to want to talk to you about that. So this is fantastic. Where can people go to learn more about that service? And also just obviously you mentioned you're on YouTube at Mickle XRP, also on X. Was it XRP Mickle on
Yep.
X? Okay,
Yeah.
just a flip of
Yeah.
that.
So
And then
someone beat me to Mickle on X, so I'm actually
ah,
Mickle there.
yeah, there's a Peter King out there that owns the peterking.com that's driving me nuts. He won't sell. His website's still in the 90s. But anyway, well, that aside, what's if somebody wanted to work with you on a professional basis, where would they go?
That's just digitalwealthpartners.net. And we also have an X account for Digital Wealth Partners, but obviously just be very careful whenever you're searching any of this stuff. If you go to Mickle on YouTube, there will also be a link there to access some of this stuff. But the best way to do it is just go to digitalwealthpartners.net. And then if you go to the upper right hand corner, and if you are someone who meets that $100,000 threshold, you can fill out a form. We'll get all your information and then book you for a consultation. So that's the best way to do
Fantastic.
it.
Fantastic. Let me just ask you, since we're on the topic, what are your fees for that?
So, in terms of the fees, and it's going to be different based on every single person. To get your LLC started, it's about $1,000. We do all the work. You don't have to do anything. You just get your digital asset LLC. Onboarding institutional grade custody is $1,000 too. And then if you were to stop there and you were just to sit in institutional grade custody with the advisory, you'd be paying a monthly payment for the insurance and the custody there. We roll that up into our high level service for advisory, passing on deal flow, working with you to generate yield. And then from there, if you're under $5 million, it's 2% annually. We do quarterly assessments, so 0.5% a quarter. But once you get over that $5 million threshold, it actually drops down to 0.5% yearly or only 0.125% a quarter. What we really want to do is be able to generate customers so much yield and save so much on taxes that essentially the yearly payment almost pays for itself. And then the last thing on top of that is we do have a performance fee for yield generation and advised actions. It's so important for people to understand. If you bring XRP over to us and that XRP 300Xs, we do not take a dollar of those gains. All of those gains are yours. They were not advised actions. You brought those assets over to us. But if we then go an extra step and create a yield on top of those assets, you get the first 8% of yield we generate. That is all yours. We would only take if 80-20 on that last 2% if we were to get you 10%. So if we were getting you a 10% yield on your XRP, the first 8% is all yours. There would only be a performance fee on that last 2%, which is split 80-20.
Got it. Got it. Got it. Fantastic, dude. Very impressive, man. Love what you're up to. I'm super grateful that we crossed paths. And here I thought you were just, some YouTuber just doing stuff in the back of your car. No, there's a lot more of what you're up to. So, brother, congratulations on all the success that you've had. And I feel like you're just getting started, man. So, the world is your oyster.
Thank you. I really appreciate that. And I have more going on right now than I ever expected to have go on. It's a lot, but it's so much fun. And I think you know that being in a space like this is just so exciting. And each and every day it's something new, and I've been loving it.
It really is. Thank you for your insights and all the wisdom that you shared on this call, man. And hopefully we can do another one sometime in the near future.
For sure. Sounds great. Thanks for
All
having
right.
me on.
All right, man. Take care.